So, Stephen, I want to talk about what's going on with crypto, because we had a guest on several months ago who predicted Bitcoin would hit 250,000 by the end of the year, and that clearly did not happen.
Yeah, look, I was not in the camp of 250K crypto or 250K Bitcoin at all. My number was 140. I was wrong as well. The peak ended up being 126 in October. But what happened over the summer were really two big things. First of all, energy costs went up due to AI data centers coming online. So Bitcoin mining companies had to actually sell their Bitcoin earlier than they normally do in the 4-year cycle. Now we're really into the 4-year cycle. We've peaked in October, and I believe that we're now in the bear leg of the 4-year cycle that will probably end sometime in October of 2026.
Well, let me ask you this, because I want to get into your business. You describe Canary Capital as forward-thinking investment firm built for the digital age with deep roots in macroeconomics, risk management, and market structures. You yourself have a history in fixed income, and I want to get into a deeper dive about how should I look at cryptocurrencies and versus fixed income, because I thought they would move not in correlation, but I don't understand the world that we're experiencing. So explain the mission of Canary Capital and then what's going on, crypto versus fixed income.
Yeah, look, they don't move in any kind of correlated aspect at all, but I do utilize a lot of the concepts from fixed income asset management in managing crypto. A lot of them have to do with the shape of the yield curve, other macroeconomic events, as well as Fed and general liquidity. And fixed income is usually the leader in seeing all of that. I can typically see what's going on in risk assets by watching fixed income markets. So we utilize macroeconomics and really fixed income positioning in order to make determinations on how we trade in crypto on a daily and even a long-term basis.
So now, as we go forward, some of the, and this is all publicly accessible, folks. So, and by the way, I'm at CES when we're recording this, so that's why you're hearing all that noise and the lights behind me. But in your most recent commentary at Canary Capital online, you're talking about several things. For instance, the cycle status, the Bitcoin 4-year cycle is still intact. Help me understand what you're saying to people there.
Yeah, and by the way, me saying that isn't very popular because most talking heads are saying that the 4-year cycle is broken. But really what the 4-year cycle is, it has to do with the code in Bitcoin. So every 4 years, there is a halving of rewards that miners earn when they process transactions on the Bitcoin network. And that really determines, their selling activity. So every 4 years, miners will basically verify transactions and produce Bitcoin in order to do that. And if every 4 years it's the amount of Bitcoin that they earn is cut in half, then at that period of time, it sets up how much they have to start selling, right? So usually that selling starts happening, in this cycle, it would be in 2026. Now, again, it did happen a little bit earlier this year. It doesn't mean the 4-year cycle is broken. It just means that other factors contributed to earlier selling. Some of the cycles have ended in December and November. This time the cycle ended in October. But that earlier month, and it's just, 1 month, 2 months earlier, really coincides with miners now selling their Bitcoin to pay their bills that they need dollars to pay for. And a lot of it has to do with energy, but some of it also has to do with equipment. Equipment that Bitcoin miners use usually turn over every 3 to 4 years. So they have to buy new equipment in order to have the latest and the greatest. And then a lot of the basic infrastructure is already built. So they're not really having to sell down and pay for that. But they typically do start looking at reinvesting and building more data centers this part of the cycle. So all of that really works together. And because Bitcoin is the largest cryptocurrency by market cap, it does drive the activity of a lot of other cryptocurrencies price, even though most other cryptocurrencies don't have that 4-year cycle that Bitcoin does. Litecoin's probably one of the few exceptions.
We also did an interview with the guy from Into the Cryptoverse, who was telling us that these cycles are to be expected, but he actually showed us graphs and metrics he created, and he was a NASA engineer, that shows peaks and troughs, and you'll get this pullback, for instance, on Bitcoin he said it could be anywhere as much as 60, 70%, and that he gauges a kind of peak as to when to start selling what he's holding, anticipating a 60 to 7% pullback, and then metrics at points when he would jump back in. What do you think about that kind of strategy?
Yeah, I mean, look, it's not a terrible strategy. It is always changing, right? Because as the halvening cycle happens, and Bitcoin miners earn less and less and less, so they have a lesser control over the price of Bitcoin because they're earning less, right? So usually what's happened in each cycle is the drawdown is smaller in percentage terms, and then of course the upswing will be smaller in percentage terms. This particular cycle, I'm expecting a total of about a 60% drawdown. In recent cycles, it's been as high as high 80s and then 70s, and now I think we're probably around 60. And then the next cycle, it might be as low as 30. But it does have to do with the lessening impact of Bitcoin miners on the market when they begin to sell.
When you were talking about the miners and the influence, why is that still such a big component of the price fluctuation?
Well, just because they hold so much Bitcoin, right? Again, miners are earning Bitcoin as and it's actually being created, right? So Bitcoin there'll never be more than 21 million Bitcoin, and about 18.5 million has already been unlocked. As it's unlocked, it goes to the miners, and then the miners have to sell that Bitcoin in order to pay for their costs, because the energy company doesn't take profit, or they don't take payment in Bitcoin, so they have to sell that. And usually what they do is they hold on to that Bitcoin until they feel like they're getting close to the end of the cycle, or until they start hitting a tipping point to where they need to start selling to pay their bills. And that tipping point, again, happened early in the summer due to increase of energy prices due to AI data centers, as opposed to later in the summer or early fall when it typically happens.
So let me ask you this. I want to jump ahead to something I was going to ask you toward the end of our discussion. Let's go there now. You've said altcoins to watch, XRP, Ledger. Tell me about the ones that the people watching should be taking a look at.
Yeah, XRP is a really interesting one because, look, it was one that I probably didn't pay a whole lot of attention to 4 or 5 years ago. I was aware of it. I watched it. I studied it. But what's happened in the last 2 years is that Ripple has done a great job of integrating XRP Ledger into a lot of new transactions and into mainstream Wall Street as well. So the XRP Ledger is moving things like stable coins, their own stable coin, RLUSD, as well as other tokenized real world assets. And I believe that XRP is going to be probably the leading token when it comes to real world asset tokenization.
What about any others? And I'm going to mispronounce this, but Hedera, is that a correct way to say it?
Yeah, Hedera is one that we also really like. And if you think about what XRP Ledger does, it focuses more on traditional finance, whereas Hedera focuses more on enterprise solutions. So think about things like Oracle, and a lot of the people that follow Hedera are going to be there are a lot of people from the enterprise software industry that follows that. It's not your typical crypto crowd. So they're very keen on its ability to take data very quickly and utilize it in an enterprise way. So that's more of an enterprise play. And then of course there's a lot of other real world use cases for some of these other protocols that aren't necessarily enterprise or financial services. And that's when you get into the world of things like Injective, Stay, Sui, which are some of the protocols that we really like that are up and coming, that are approaching some of the legacy players like Ethereum and Solana.
And then there are potential for outperformers, you pointed out in one of your recent research notes. And again, everybody, these are publicly accessible. Take advantage of this. But is one of them, is it Litecoin?
Yeah, so the reason why we like Litecoin so much is privacy. We believe that privacy is going to be a major theme in monetary focused blockchains. So Bitcoin is more money, but it's a public ledger. You can see everything that happens. You can see somebody, if you know what somebody's wallet address is, you know exactly how much Bitcoin they have, who they transacted with, how much they transacted. Whereas the privacy tokens are the ones that have privacy features. They can hide that. And I believe that privacy is going to be the next iteration of importance for transferring of money. Litecoin has the ability to select privacy features for your wallets and transactions, or the ability to keep it public. Zcash is very similar to that, where you can select public or private. And then Monero is really built for pure privacy. But the problem with pure privacy is it really doesn't work in the US and a lot of Western countries because the Bank Secrecy Act. So that really works in a lot of, I would say, emerging economies.
All right. I want to talk about your background and then get into what your company, what you folks are saying about what's coming at us this year in 2026. But you were at one point managing director at Guggenheim Partners. I would imagine you had a more traditional trajectory, although cryptocurrencies are now very, I guess, traditional. What made you flip? What made you not flip, but switch to go into all of this? And then also bring up, you were was it Valkyrie, and they got acquired by CoinShares. So
right.
you certainly do have the gravitas, and I hate the word, but that's what the pontificators on the major networks always say, to understand all of this. So what drew you to this from a more traditional path?
Yeah, so primarily I was managing fixed income portfolios, particularly portfolio construction, which is looking at the overall risk of our fixed income portfolios. But in about 2015, that's when the bond market was really peaking out in its generational cycle. Bond yields were extremely low, spreads were very tight. It became kind of boring, and I was really looking for the next thing. And cryptocurrencies seemed to be something that I was very interested in. I was particularly interested in movement of money globally, particularly across various jurisdictions, across currencies, and even more so in moving remittances from one country to another. I thought that there was a big opportunity to disrupt that. And by the way, that's one of the things that Ripple was founded on, which is why I've looked at that very closely as well. But I decided in 2016 to just sort of, leave, retire from the world of fixed income, and jump in on the business of blockchain. But yeah, my path was pretty boring and standard. Started off as a fixed income analyst, primarily focused on emerging markets and sovereigns and Eurobonds, and then moved into trading those bonds, managing those bonds, and then running portfolio construction for primarily the overall business that you're doing.
So let's talk about what's going on in the world right now, because the case you just made that drew you to all of this in 2016, I would see, the international issues that are playing out at this point seem to me to almost amplify what drew you to this asset class with the potential for growth. Am I missing something here? Because the ability to track your transactions in a blockchain style that preserves the history and might even protect would seem to me quite valuable.
Yeah, absolutely. Well, what's interesting is in 2016, when I first jumped into the space, I had a lot of ideas, and there was a lot of opportunities, and there was a lot of I would say promise, but a lot of that, this is 10 years later. Just now, I feel like tokenization is really starting to take off. And there was a lot of people working on it 10 years ago, and we we have been working on it, and it's finally here. And now that it's here, you've got all the major banks building something there. JP Morgan has forked the Ethereum chain and utilizing that for its own internal blockchain for tokenization. BlackRock, obviously, I know the PIMCO's involved. I know that there's a lot of other, large firms that are involved in tokenization of real world assets now, along with some of the ones that have been doing it for a long time. My focus has more shifted to a pure asset management path, which is something that, I'm just, something I've always done. But I still dabble in the on the tokenization side.
I just want to apologize to everybody. In the first 10 minutes of this discussion, I'm at CES, obviously, tech and the Consumer Electronics Show. You'd think they'd have good Wi-Fi here. Think again. Even if you pay for it.
Everybody there's using it.
Well, that is an issue. That is an issue. And I couldn't hear some of what you said. So if I'm asking you to repeat something, forgive me. But you just brought up Jamie Dimon and JP Morgan. And what's interesting to me is that now that we have the major institutions no longer pretending like, no, I mean, Warren Buffett called it shitcoin at one point, or maybe it was Jamie Dimon. But they're not saying that anymore. But you do bring up, there are individuals and retail institutions that are hesitant to re-enter right now because of what's going on with Bitcoin's. Your folks called it underperformance. And I'm thinking, okay, how do you define underperformance? Because for some people who might have been in since 2016 or 17 or even 2020, it's not underperformed.
Yeah. 2025, it certainly underperformed equities, gold, even bonds. But if you look at it holistically, in a very short period of time that I've held Bitcoin and other cryptocurrencies, it's outperformed a lot of assets that I've held for a very long time. So I've been quite happy personally, and I know a lot of other people have too. You have to take the down with the up as far as the market goes, and if you can hold your breath and work through it, it usually has paid off. So
that's the next question I wanted to ask you about holding your breath. You ever lose your lunch? You ever get kind of nauseous watching what happens in the crypto markets?
Yeah, this year has been quite a ride. A lot of it.
2025, right?
2025. Yeah, a lot of it has been unexpected. 2024 was a great year. Markets really rallied all the way up until the inauguration, which was, the first big peak. And I think what a lot of people, including myself, didn't realize was, look, it ran up quite a bit. It's not going to go straight up forever. And it just needs a little time for mean reversion to set in before it hit its final all-time high in October. So a lot of the summer and spring even was very difficult for a lot of funds because, their expectation was, okay, yeah, I mean, this is, final year of the bull cycle. We expect, crypto prices, and, some people are calling for, 500,000 or 250,000. For me, it was 140,000. And, a lot of us got that price target wrong. But when Bitcoin did get into the 120s, that's when, we started de-risking. It worked out, but still at the same time, it wasn't quite the market that I expected or a lot of other people expected. It's the first time in the 4-year cycle that, the final year of the bull run ended up down for the year and not up.
I'm going to bring up an individual who we've interviewed before, who I respect greatly, who is well esteemed in the industry, but he was projecting, and he was wrong, end of year, very high number for specifically Bitcoin. What is the cautionary tale there? Because this is not an uninformed, unintelligent individual. He pretty much knows what he's doing, but he got that one wrong.
Yeah, look, I mean, there's a lot of factors that go into this, and me personally, I'm looking at things like, unemployment numbers. I'm looking at central bank holdings. I'm looking at inflation. I'm looking at the Fed. And when I looked at all of those factors put together, there was, 2025 was really the year for gold, right? So some of the factors that were either ignored or not put as much weight on was AI, and AI data centers being built did play a very, I would say, a very large, and probably more of an outsized role in prices staying relatively flat or down. For Bitcoin miners, a lot of us didn't put as much of that, but looking back, we're like, oh yeah, well that was the reason. And then the other factor was and this really started back when the Biden administration website Swift against Russia, and it caused panic for a lot of other countries saying, well, the U.S. can just compensate our, they could confiscate our money anytime they want via Swift. So they started selling other assets and just buying gold, at the central bank level, and also at, just individuals that were fearful of confiscating, property. So we saw a big upswing in gold. Now, we expected that. What a lot of people expected was that Bitcoin, which is, billed as digital gold, would go up alongside it. But really what people wanted was that physical gold that was the ultimate safety net, as opposed to something that was digital. So that's why gold ran and Bitcoin kind of stayed flat. People were really focused there. But some of the other macro factors that I was looking at that muted my expectation of where Bitcoin would go was things like liquidity and consumer spending, consumer confidence. So cryptocurrencies have largely been an investment by retail, but retail's out of money. They're exhausted. They're barely paying their mortgages. They're barely paying, their other loans, student loans, credit card debt, auto payments. They're all up at levels that we haven't seen since the financial crisis. And if you can't pay your credit card bills, you're not speculating on cryptocurrencies. And by the way, the people that do have the money to speculate, they're now speculating on prediction markets. So that's where a lot of the liquidity has gone in 2025, where retail normally boosts cryptocurrencies, where you see a typical blow off top at the end. We did not see that blow off top because of the liquidity crunch and because of low consumer confidence, low consumer spending.
You use a whole set of metrics when I've interviewed other crypto folks that I don't know if they're using them, but it seems a very logical and very simple series of metrics to consider, not the one and all, but as an overall view. Does that come out of your fixed income background? Because looking at labor numbers, who would think Bitcoin and labor numbers?
Yeah, no, it really does. And, when you come from a fixed income background like myself, you're usually very risk adverse. You're always looking for a pessimistic view, a reason to not buy something. And when you're doing that, I'm looking at probably 30 factors. And I think a lot of people that are investing in crypto regularly are looking at like 2 or 3 factors. One of them being Fed rate, the other being, unemployment's a big one, and then CPI. Those are the 3 that you'll hear a lot of people recite. And then the ones that are a little bit more sophisticated might say things like, global into monetary supply, which is a big one that I look at when I'm looking at the correlation of Bitcoin. But there are a lot of factors out there that really control how people spend assets, whether it's investing, speculation, or just, again, paying bills.
So let me ask you about a question that a colleague this morning brought up with me. He said, how much has your energy bill gone up this year? And his has gone up 30%. And there's a huge outcry nationwide. Electricity demand is up because of the processing centers for AI. Could that have a negative impact down the road with the expansion of cryptocurrency assets? If people are going to call on Congress to do something that impacts what's going on with the data center build-outs and energy, does that correlate to negativity for crypto?
Well, I think what's going to start happening is, now that a lot of cryptocurrencies have matured, now that there's a good amount of regulatory clarity from both legislation and from the SEC and the CMS, and other agencies, is that you're going to see a divergence of price. Everything's not just going to move together. So the things that data center build outs affect are anything that, like Bitcoin, for instance, Bitcoin still operates on proof of work and requires energy. So anything that requires energy is going to be more affected by that, whereas things like Solana and XRP and Hedera aren't going to be as dependent on energy prices. They're going to be, those prices are going to be dependent on usage and who's actually using those protocols to build. And that's why, I expect a divergence in 2026. I expect Bitcoin to not hit another all-time high till probably 2027. But I do expect to see all-time highs in certain currencies like XRP.
And I'm still guilty, even though I left, quote, traditional media many, many years ago. I'm still guilty of following the herd. We love a huge headline, and Bitcoin is what gets the headline.
Yep.
When you look at 2026, and again, folks, you can read this online, your note talked about the potential downside targets, Bitcoin failing to recover, technical model putting the support level at what, 60 to 70,000. Do you really think we could hit that?
Yeah, I do think Bitcoin will go down to, probably the 60s. Again, I could be wrong. I'm just throwing a number out there based on the data that I have today, and that could change. But something like an XRP, I do believe that it could hit $5 per unit in 2026, which is about a double from here.
And I know you're watching price action just in this first month of 2026. Why is that important to you? And I might have misinterpreted when I read the note, but does that set the tone for the rest of the year, whether we're in a bear market for crypto?
Well, not really. And the reason why is, after October 10th, and that's when a lot of longs got liquidated after the peak. The price of cryptocurrencies just steadily went down all the way through November. And then typically what happens is between Thanksgiving and the end of the year is when people are selling for tax losses, myself included. So you're going to see continued downward pressure all the way through December. And, January we could have, we could end on a high note, but that's probably just mean reversion. Nothing has really changed as far as causing prices to want to go up.
Tell me how, and this is for a Luddite. I am not a crypto expert. I am one of those very concerned curmudgeons about where I invest. How would someone like me, if I were to approach Canary Capital, how does Canary Capital become a useful tool for me? Are you actually helping me buy different crypto assets, or is it just the research? Explain the user journey. Because I imagine some people watching us would want to call upon you, folks.
Yeah. Look, there's probably three sides to this. The first side of it is our ETFs are passive, so we're simply offering a vehicle that allows you to buy or sell, do what you want. Now we are trying to focus on things that we like at the moment. 3 years from now, there might be something in the mix that we don't like that no longer is relevant. But that's typically how the ETF business works. You build a product that allows people a convenient way to access it, and they make their own decisions. On another thing that we do is we run a hedge fund that is very active, and we've been running that hedge fund for 3 years. So we actually take directional bets in that hedge fund, and we also utilize a lot of fixed income in that fund as well. We trade fixed income in a sleeve when we increase that sleeve of fixed income based on where we believe risk is in the market. And then third, you mentioned research. We do put out a lot of research. I usually write a macroeconomic piece about once a month that describes the overall picture of the global economy, and then try to boil it down into real actionable items. And then we also put out something about once a week on our opinions on what's going on in the market. And then we do some updates as well throughout the week on not necessarily opinion or directional bets, but just, this is some of the data that we're seeing. These are some of the events that we're seeing. So we try to provide that to our clients.
And I'm going to start to wind down and wrap up with you, because in addition to having bad Wi-Fi at the International Consumer Electronics Show, I've got 1,000 different wireless signals interrupting as I'm listening to you. Going forward, what are you specifically looking at in 2026 that perhaps other people are not paying attention to?
Yeah, I mean, I'm really keyed in on number one, on the divergence that's happening and focused on some of the cryptocurrencies that are, the protocols are building real things and real transactions are happening. So we're focused there. I'm a lot more bearish on Bitcoin this year than most people are. Most people are saying that, the 4-year cycle's dead. It's a new world. Bitcoin's going to hit all-time highs in 2026. Price targets of 200. Some even are saying 500,000. And I see no catalyst really to get there. So we're again we're short-term bearish on Bitcoin for the year, and more so focused on, I would say, just protecting our assets.
I would say covering, I'm not going to say your ass, covering my ass, because look, I like to joke that if I were managing people's money, I would help you turn $1 million into 10,000. That's why you would not want me as your money manager. Okay, so we've talked about what you're paying attention to. Is there anything that keeps you up at night? I mean, is it because you look at the whole global economy?
Yeah, look, some of the things that I'm worried about right now is, I'm watching oil prices drop. I'm watching, the U.S. has taken possession of oil tankers in outside the coast of South America. These things can lead to real war, and anytime a war breaks out, we've seen it before, risk assets do tend to drop. So what's keeping me up tonight are the uncertainties of things like war and other skirmishes around the world that can cause risk assets and the market to panic.
Is there anything you want to add as we wrap up?
No, that's all I got. I'm a simple guy.